Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for March 30th to April the 3rd, 2020. So after a wild March and a wild Q1, we now entered into the final trading week of the month and the quarter. March officially ends on Tuesday, this coming Tuesday, and then we have a fresh month to begin on Wednesday. Fresh month, fresh quarter. And so there's definitely a lot to look back on because Q1 was quite historical by many measures, but this week itself is very historical. As was widely reported in the media, equities, many of the indices, rallied more than 20% from the recent bottoms and cracked some key benchmarks. So it was widely reported that we may have entered into a new bull market. And so that's basically the video. The title for this week's video is New Bull Market. Are we in a new bull market? We'll talk about, we'll see what the charts have to say about that. And we'll talk about the week that was and then get into the week coming up. So just for the Econ Calendar, there are some things that we need to watch out for this coming week. There is the pending home sales number on Monday. Nothing usually too market moving, but very curious at this point to see what the general health is of the U.S. consumer. What is that sentiment looking like? We do have consumer confidence on Tuesday morning at 10 o'clock. Then we have the ADP number, which is kind of foreshadow the NFP number on Friday, but we have that ADP employment number on Wednesday. That will be the new start of the month. Got the ISM number as well. That has been let's see, that's been kind of trending downwards. Jobless claims is going to be a big one on Thursday. Once again, this past week we had a historic jobless claims number with over 3 million new applications this past week. So let's see if this trend continues. People are going to look out for that. And of course, on Friday we have that NFP report, the non-farm payroll report, or the employment situation report, and that'll be very, very interesting to see. So that will definitely be one you want to mark on your calendar. 8:30 on Friday. Just watch out for that if you're taking trades or swings into Friday, because that can be a market mover. So let's launch into the charts now, and let's see if we're actually in the new bull market or not. So let's start with the VIX, and then we'll talk about the broader indices in a few moments. So as we always do, we'll do a security by security analysis of all the major indices, some of the top ETFs, and then we'll talk about some of the sectors this week. So we'll begin with the VIX. Not a lot changed for the VIX in terms of where it ended, but still up over 120% so far to the month. So this month will probably close green with two trading days left. It's gonna take a lot for the sellers to take this thing all the way down to this level here. So right now VIX looking at a big green month, and it did go from bottom to top of this Bollinger Band. So that's something you need to look out for, is that it's very difficult for momentum to continue on the VIX product unless you can sustain high levels of fear. As we saw in the weekly chart already, that kind of deflated a bit this past week. So this past week, we were looking for that reversal, right? So last week, as you may recall, we were watching that Bollinger Band walk on the daily chart. That finally did break, as well as on the 2-day chart. And this week, it finally broke that Bollinger Band walk on the weekly chart. So here, we drew our ranges, right? Once it broke below that level there, that sort of paved the way for this move lower. The buyers did buy it back, though, near the end of the week. But Friday's trading action was a bit suspect. And price does at the end of the day pay, but you do need to have a bit of context. Friday was the first quadruple witching since the sell-off, and we had a lot of equities and a lot of indices sort of pinned to their strikes near the end of the day. So you can't really overweight Friday's action, because a lot of it has to do with liquidity and supply and demand, and people closing out their positions. So for now, what we do know is this. Went up and went down, and now that caused a reversal to the downside, still trading below the prior week's low. So that's basically a weekly reversal. So it did reverse on the weekly chart. New week coming up, we're going to redraw our ranges. If you're a seller of VIX, you do not want to see the VIX break above this past week's high, right? If you get above there, that's trouble. But for now, I'm just going to leave this line in here really quickly just so we can do our weekly analysis. But basically, as you see here, we had that broad information, this red line here, that's been a trend line that we've had drawn for many months, and it came right back to it. So it's sitting right on top of that now, right on that level. Now you want to see, you know, what the sellers can do here. Can they push it below this brown information and pull it back down in here, or does it find support here now, possibly take out this past week's high? We have another sort of attempt to go higher. On the daily chart, here's what it looks like. So on the daily, this is essentially what happened. Remember going into last week, if you recall, I had mentioned that I had shorted VIX before it broke that level there. So I was anticipating well, more than anticipating, I was looking to break that low, right? So I was trying to break that low using a lower time frame setup that was going to trigger that break below this bar here. I was in that trade, still short VIX, looking to cover some more in this range here. We have unfilled gap right there, 38.66. You know, a bunch of them down here. You can see all the green lines here. Now we have one more unfilled gap right here that was caused on Friday. So we basically, I'm going to make that a little thinner. We don't need to have it that pronounced. So we gapped up on Friday, right? So we gapped up. So this is basically a kicking pattern, a bullish kicking pattern for the buyers of the VIX, because you close down here, it looks very bearish, right? And all of a sudden the next day you open above the prior bar's range. So that means anyone who got short down here, they basically got trapped. So the only thing though that's helping the VIX right now, why it's not completely, you know, a bearish picture for the VIX, is because is because there's still a green month, right? So you can see here, green month, green quarter. So orange lines your green month, blue lines your green quarter. Very unlikely in the next couple days you're gonna break below those levels, unless, I mean, you know, very bullish happens. And then, you know, they rips right back to the range again, but that's going to be very unlikely. So more than likely, we know we have a couple days left, and this is what the levels you need to watch out for. There's the prior week's low. See that purple line? So let's see what happens this week, right? So this past week, we gap down on Monday. This is the Monday. Okay, that means you break below the prior week's low. So there's your reversal on the weekly chart. Okay, comes back up now, retests the break. So that purple line, again, last week's low. It's picture perfect, right? So they break it down. Anyone who chases, they get stopped out in this sequence. They get stopped out there if they put their stop tight or on that day's bar. Retests the breakout level, breaks down again, and the anticipation, or not anticipation, but the expectation now is that this low should get taken out. Okay, now if this low does not get taken out and it goes the other way, so it keeps going this way, so it takes out this week's, you know, if it keeps going up here, it takes out that pivot high there, then you can clearly say that the buyers are in control, because with this sequence, that's supposed to get taken out. If it doesn't get taken out, then the buyers have overwhelmed the sellers, and we have a good chance for it to come back higher. Especially if this weak line, this line here, this purple line, that's the weekly open. So it's going to open wherever it opens, somewhere in this range, right? Wherever the VIX opens up, and that's the level that price is going to need to contend with to see if it can stay either full time frame alignment to the upside or to the downside. Okay, so because we're gonna have a fresh week on Monday, fresh month, fresh quarter. I keep repeating it, but it's very important. These new weeks, months, and quarters, it doesn't come around very often, the new month and quarter. So you really want to see how price transacts around those levels, just to show you the significance, right? So let's go back in time a bit here. I know that chart's a bit, there we go. So the last time we had a new month and quarter, so that was Jan, right? So here's Jan. So here's January right here. Okay, so here we had a fresh month. So here's Jan the 2nd. Fresh month, fresh quarter. Now the week already opened up here. Okay, so you can see here, it's tight stuff here. Look, the week ends, that purple line acts as resistance. Once you break below the monthly and quarterly open, it was gone, right? VIX sold off. Now, once you break above those levels, that's when things can get dicey again if you're long the indices. See, we didn't have any price action stay above there until here. Here, we're trading full time from alignment to the upside. So remember in February we said watch out, because that's when price here cleared above the quarterly open, the weekly open, and then it cleared above the monthly open right there. And then it was gung-ho to the upside, right? This has been full time from alignment for the past, again, since Feb 24th. It was full time from alignment until this past week. Okay, so that's the significance here, is that we had that huge run up. When you have full time from alignment, you can get these types of moves. That's the way that price will work. So now you have mixed alignments, you have mixed time frames, below the weekly open, but above the month and quarter. If these things all get aligned now, that's when you have to start to to really pay attention to what's aligned to the upside or the downside. Okay, so that's VIX on the daily chart now. Watch to see if you break back below Friday's low, okay, you come back down here again, and you expect it to take out that pivot at the very least. And we have all these gaps down here. So on Monday, if it opens here and comes back through, you expect immediately to get that gap taken out, and then you expect this to get filled. All right, in short order. Okay, so let's talk about the SPY now. On the SPY chart, actually, I'll show one final thing. These past 3 days, this is basically a respite for a bit of a break for sellers. So to be frank, we had a huge rally in equities, and the VIX from peak to trough here collapsed about 50%. So it's been about a 50-cent pullback. But the past 3 days, in terms of the VIX itself, has been very, very muted. So take it for what it is. But basically, on the price action front, it looks like a 2-day chart. On a 2-day chart, it looks like an inside bar. So very tight stuff. This is consolidating now. All right. So now you definitely want to see on Monday which way price breaks this inside bar. If it goes inside bar down, that will be with that will come back through here again, back through the range. Otherwise, you go inside bar up, you know what happens. You may have full time for alignment back to the upside again. So watch out for that. This is one of the things here now where price is kind of ruling the day, right? Because the news is coming out so there's so much uncertainty around the fundamentals and the continued news flow around COVID-19 and of course the global recession and all these things that at the end of the day, in terms of trading, you just need to focus on the price, because you can have wildly bearish fundamentals but have prices going up. So right now you do not want to fight price. It's not one of those events where you want to be trying to take a macro picture and a fundamental picture and hold it no matter what, because price can go drastically against you. And again, it's about remaining solvent at the end of the day. So let's go with the SPY now. So in terms of the SPY, let's just talk about what happened this past week, and then we'll talk about the bigger context in a second. So the SPY this week had a massive rally. Okay, so from the bottom of this trough here to the highs of Thursday, it had a plus 20% rally, plus 20.41% on the SPY ETF. So if you simply define bull markets as being any sort of move that exceeds 20%, then yeah, we're basically inside a bull market right now. The only issue is that you did decline. So here from peak to trough, from peak here to trough, you did decline 35%, a little bit more than that, 35.6%. And even this 20% rally is nothing. It's barely clawed its way back past the maybe 40% of those losses. So right now you're trading still in a deep pullback. The issue here is that if I draw something like a Fibonacci retracement here, I go from this again, the trough to the peak, we're right at that 38% area. Okay, so right at 38.2. That's an area that many technicians, a lot of people who use Fibonacci's are looking at. It would not be surprising whatsoever to see sellers step back up here again and break below this level to try to retest the lows. On Wall Street and in trading, it's all about trying to retest the lows and see who are the weak longs and who are the strong longs. Because if price comes ripping back through here again, if you got in on Thursday or Friday, you're going to get stopped out, right? Because if price breaks below here on Monday and it comes back through the range, it looks for that gap to fill, right there, right here, then if you bought the last couple of days, you're going to be underwater very, very quickly, and many longs will basically just get themselves out of that trade or get stopped out before it breaks below the recent lows. So right now, the pullback has been less than 38% from this trough. So even though we had a big 20% snapback rally, this is occurring in a bear market, and I think a lot of people have been talking about the parallels between the 30s and this new decade. And it's I think an important factor to remember that we often see the biggest rallies during bear markets. So you cannot overweight the returns right now and just simply say that we're in a bull market because we had a 20% rally. So are we in a new bull market? It's a wait and see, right? So we're as traders, we don't need to fixate ourselves on that term, because actually, it doesn't really help us. Does it really serve us to think that we're in a bull market or bear market? Not really. If you've been following my videos, then we simply follow price. and that connotation or that semantic of putting labels on things, it doesn't really help us in that much. So at the end of the day, we let price decide where it wants to go, and we simply respond in kind. So let's go back to the analysis now, and I'll show you where the SPY has gone. So right now on the SPY, the big picture is this. Here's a quarterly chart, a 3-month, right? It went one end to the other side of that broad information, right? So it basically went through that entire range again and took out Q3 of 2018's lows, big outside bar. The reality is that in Q2 of 2020, the question is not whether or not we're in a bull market or still in a bear market. The question is, what's the next bar going to be? As always, that's always the next question. What's the next bar? If it goes outside bar down, we're going to see more momentum at the downside because that's a normal condition. If you can somehow break below, this past quarter's lows, that's going to kick off a whole new round of selling. And I'm sure that there's sellers right now who can't wait. They're chomping at the bit to get prices even lower because we have not gone, we've only, even though it's been a really steep pullback, I think to the tune of, a little over 30%. So this pullback here is 35%. If you recall from my last video, a 50% pullback puts us in that area here. Okay, so Q1 lows of 2016. So that's reasonable for any kind of big decline is a 50% or steeper pullback, right? So you can even expect even a steeper pullback if the sellers can really begin to take control of things. For now, the fiscal responses have been very strong, and the markets have liked that so far. Governments are basically, as we said last week, they're throwing everything at it, including the kitchen sink. So everything is getting thrown at this, as they should, because governments are, it's their mandate to keep their economies solvent, to keep their citizens employed, and to keep the growth engine going. So they're not going to simply just let things fall apart, because luckily we do have politicians who have and central banks that have learned from history. The only issue, though, is, as history has shown us, if we want to take parallels to the 1930s, is that fiscal stimulus has never gotten the economy engine back on its feet again once it's derailed itself. So if you looked at the 1930s, even with FDR's New Deal, and that time was the biggest stimulus spending package ever, that actually did not get many Americans back to full-time employment. People like to forget this factoid, but what got America out of the Great Depression was World War II, right? World War II is what it required to get every man and woman, or lots of men and women, back to work. That's what it required. And so, not saying we need a world war again to get things back into gear, but that's the kind of response that's required, a national response that causes everyone to put their heads down and get back to work. That's going to be the type of response required by the nation to get out of this dilemma. Whether you want to call it a recession, depression, it's caused a lot of emotional, psychological scarring already, and I think we still have a lot of time required to digest some of that. So on the monthly front, outside bar down, that's momentum down. You break below there next month, watch out, right? Because that's going to kick off a whole new round of selling. But we're trading right back here again, right? So we're back in this range again, and this is a really big candle. So what's the chance that we may go simply inside bar? It'll be a very wide range, because even if you just trade inside of March's bar, it's a huge range. So you could easily get an inside bar for the month of April. Okay, so that could happen for a couple of months, like we had back here. At that time, this looked like a big bar. Remember December 2018? How tame that looks now, but that at that time was a very big bar. It was a 9% bar. That kind of puts things in perspective. It's like it was bigger than, let's just draw the peak to trough for a second. The high to the low of this bar, that's a 30% bar, right, in one single month. So yeah, that's a very big bar. So how do you get out of that? If all of a sudden things get really bad very quickly and you break below March and April, like right away, it goes boom, that's going to be very aggressive, because that'll be outside bar down continuation move. You can expect some real selling step in there, because that would be a very aggressive move to the downside. So we have to wait and see what happens, right? That's the nature of it, is we want to see what happens with price next. On the weekly chart, the buyers did step up, no question about this week. The buyers stepped up and they trapped a lot of shorts And frankly, that trade was probably getting a bit overdone to the downside, as we've been trading just basically straight down in one straight shot. And anyone who got short, last week or the week prior, and this week here, it definitely trapped a lot of folks and wiped out some of those gains on the short side, because it went outside week to the upside. All right, so it went down the prior week and then up. So we drew that level, right? We drew our levels in and broke down there. As soon as it came back in, you have to watch out it doesn't go to the other side. That's what happened. It broke down below it, right back through the other side. And remember, we got that broad information that we drew a long time ago, correct? And it basically found support right there, right? So it came back in. As soon as it comes back in, if you're short here, you need to watch out, because you can lose all your you can lose all your profits very, very quickly if it comes back to the range again. And that's what happened this past week. Outside week to the upside. So on the SPY now, this is what we're looking at, just like we saw on the VIX, but the opposite. So here, okay, on Friday, inside bar down. Here's your Monday. It gaps slightly lower, and it goes gaps down, and they close it slightly lower, below the prior day's low. But on Tuesday, look at that move. That's your bullish kicking pattern. Okay, that's the same thing as the VIX, but the opposite is you close with the downside, but you open well above the prior week's range, prior day's range. Okay, so that traps anyone who got short down here. You can imagine. Let's say you shorted on Monday, right there, right, thinking this thing was going to keep dumping. But what happens? They trap you on Tuesday and they squeeze you. Trap, by gapping up. They went all day, right? So here, opens here, basically all day in one direction. So that's a squeeze. Again, and here they're running out of gas. So here now, as I was saying in the chat room that I host, I was saying pretty early on in the week is that it's probably going to be a green week, because even if you have selling come in, what's the chance that the sellers are going to be able to break down here and come back and break below and trade below this weekly open line, that purple line there? That's what you needed to see this week in order to see some real selling. We got none of that. We only had some selling on Friday, right? But again, as I mentioned, that's probably more related to the quadruple witching / options expiry. Because look at some of the strikes. Okay, look, SPY closed exactly at 254 on the penny, right? So exactly at the 254 strike, right? So there's your inside bar now. So now, if you break below there, so what we want to watch for on Monday is if you get this inside bar in down sequence, and if you have the weekly open around here, you're going to get that full time frame alignment again. Okay, so if it breaks below there, then the seller's going to step back up, because now you're going to have full time frame alignment to the downside. So let's draw in our levels now. So we know our levels now. So we're going to draw in that high end of the range on the weekly chart and this bottom end of the range on the weekly chart. So how to get outside this range this coming week? If you go a little higher, it's going to go outside bar up on the weekly chart. That's momentum to the upside. I call it Momo up on the weekly. But if you break below Friday's lows, you can come back through the range again and begin to try to retest the prior week's lows. Right? So that's what we want to be watching for here now, is can they do that? Because if they rip back through here, they can basically evaporate that 20% rally we just had, and that would be a very, very strong bearish move. All right, so let's talk about the Qs, because the Qs look very, very similar. Now we can go a little bit faster because most of the other indices look identical, because we trade, because there's so many correlations during sell-offs. The Qs, the Dow, the emerging markets market, the Canadian stock market, all the charts basically look the same. The Russell's a little bit different just because it started off from a different place, but the essential rally itself looks nearly identical, so we don't need to go as deep into some of these charts. So just a quick thing. So again, same exact condition for the Qs. I'll just show you some things here. So here's the outside bar right on the Qs. You still have a long way to go to take out this low, to take out Q4's lows of 2018. So the Qs hanging up the best out of all the indices, well off that, right? So not even close to testing Q3 lows from 2018. You got the weekly, month, you do get that outside bar down, so it's still that Momo condition. What happens next month? Okay, on the weekly chart, we're going to draw the same thing in. So we'll redraw our pivots. So there, this week's high and this week's low. How do you trade in relation to those two areas? Because let's not forget, That's, if we break either side of that bar, that's going to be either Momo up or Momo down, and you're going to want to know, what side of these bars you're trading on. Again, very, very big range. Would not be surprised to see some sort of inside condition, or again, if buyers get very aggressive or sellers get very aggressive, and you break those levels, you trade either above this or below that. You definitely want to know that and adjust your bias. So on the daily chart, a lot like the SPY chart. So bullish kicking pattern, up, 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 grinds up. If you look at the recent pullback here or rally, so if I draw from the trough to the peak, all right, we're sitting right at 38%. Look at that. That's just nearly an exact tap of that. So 38% is right there. And they tap it on Thursday. It goes inside bar. Here you got to watch out, right? Because for sellers, if they break below Friday's lows, look, they pinned it right at 185.30 to close it, right? So very close to that strike price, 185.30. They break below there, they immediately go after that pivot there, and you're going to have the weekly open wherever it is around here. You could be trading below that, and they're going to come after that and try to fill this gap right away. So watch for that potential scenario. That would be the bearish scenario. The bullish scenario is that it breaks up above here, inside bar up, okay, and then it breaks above the prior week's high. That goes Momo up now. So that's the two scenarios. Or you get something in the middle, which is more likely, because that's usually what happens, is that you have your two extreme conditions or scenarios, and you have something that's that's a little messier, and that's what the market tends to do, is kind of give you more of the messier option than the really clean option. And that is, you trade for a while, right? You trade inside that, and then you finally go for a test that breaks below or above. So that's the cues. Pretty straightforward, just like the SPY. Dow, same thing, right? Dow, man, all the charts look pretty much identical. The Dow, though, if you look at the bigger chart, the quarterly, it did come through Q3 2018. But look at that broad information. It's holding, right? So all the broad informations on these indices pretty much look the same, except for the Qs, right? It did not take out Q4 2018's lows yet. But they all pop back into the range again. So that's always the question is, once you're inside of broad information, you break below the low, does it keep going, or does it come back through the range? Right now, it's come back through the range, right? So all of them have reclaimed their lows. It did break below. It was a liquidity thing. Stopped out any folks who had gotten long here years ago, right? If you put your stops or you got scared, they stopped them all out. And they come back through the range again. And so far, it's come back. If it breaks below here, it needs to stay below. Okay, if it doesn't stay below, it's going to pop back up and through the range. So right now, the buyers have done a really good job of reclaiming that range, and you're back in that broad information. And given enough time, this thing could repair itself and head back higher again. But so far, that's what we need to be watching for. Here's the monthly chart. Here's the example of that. And again, I drew this broad information months ago. Go back to the videos. You'll see this in every single of my weekly market outlooks. And this is what happens, right? So if you break above the broad information resistance, it has to stay above. If it doesn't stay above, you come back through the range. That's what happened. Broke below, could not stay below, again, possibly come back through the range here, especially if they can start doing that weekly momentum move. It may take some time. Usually the sell-offs, the rapidity of a sell-off is always a lot faster than the grind up, right? They always say markets take the stairs up, but the elevator's down, right? So that's what we kind of saw in the past several weeks. So at this point here, outside bar up, and we want to watch that condition just like we're watching on the Qs and the SPY. What happens with this outside bar? Just go outside bar up, down, or something in the middle, something messier. So there's your Dow chart, and once again, we had the exact same thing. This is even more. This is kind of, if you want a little bit of price action, this is really, really nice. Inside bar, outside bar. On Monday, it goes outside bar down. That's your normal condition to the downside, right? So sellers, they try to push it on Monday, but guess what? They got trapped on Tuesday. Same thing we talked about, with the other indices. Bullish kicking pattern, right? So it opens here, trapping, and we got short Dow on Monday. Okay, and immediately they go after those pivots. That's exactly what we expect to happen, is that this move will then, because it's an outside bar and down, it'll come back and take out this pivot's high at the very least. Okay, and they keep going, and finally on Friday, it runs out of gas. 216.60, close to the strike price there, and that's where they close it off on the Dow. So for the Dow, yeah, that's what we want to continue to wait for now, is we see where that inside bar breaks. Because they all have it. They all have that inside bar on Friday. Friday was very tight, even though we had that really steep sell-off on Friday at the end of the day. So look at this chart here on Friday. on the 60-minute chart. So it's very tight, right? It's very, very tight stuff. But if you're, if you're day trading this stuff, you get a slow grind up, right? Slow, low grind up all day, and it takes one bar to basically negate all that work, right? So very frustrating if you're trying to establish a position, or you're on the long side here and you're trying to trail, and then boom, last hour of the day, the entire day's move happens in the last hour. You didn't have to be here most of the day. So that again is probably related more to OPEX or option expiry, quadruple witching, than anything else. But now we want to see, again, it's an inside day. That's how tight the things were, right? It was super tight inside of Thursday's bar. So now you want to see how it breaks on Monday. Let's go on to Russell now. So Russell, how are you doing, Russell? So Russell, a little different chart, right? So the Russell's a little bit different than the other charts because they don't have the it's not a outside bar down situation on the monthly chart, because the Russell's coming from a way different place. It never hit all-time highs in 2019, right? It was a well off. That's the highs here back in 2018. It never hit those all-time highs in 2020. So a bit of a divergence there, right? So in hindsight now, we now know that that was definitely signaling a bearish divergence because the small caps never hit their all-time highs. So now that outside bar ripped right back through the range again. Again, we would not, I said in last week's video, I would not be surprised to see that low get taken out. This one here, Q1 2016's lows. Okay, that's a 46% correction from peak to trough, and that would make it a reasonable bear market. And so again, month will close out here, a quarter will close out here very shortly, and then can you take out that low there, outside bar down? Okay, monthly chart looks like this. All right, so there's your monthly chart. Big red bars, big bid, all the way down. Let's see if it keeps going or not. Sellers have stepped up so far. And on the weeklies, you got this. Okay, so just basically, you do not have an outside bar on the Russell. This is different than the other indices. So now we can draw our ranges in. Okay, if you break below this week's lows, watch out, because you're gonna go right back to the, you're going back down again. Okay, so that's what you need to watch out for. If you see some sort of weekly intraday reversal, that's what you need to watch out for. So on the Russell here, we don't have an inside bar on the Russell, but we do have this on the 4-hour chart right there. Inside bar down, and they try to reverse it on Friday, but they closed it at 112.59, so very close to that 112.50 strike. So inside bar down, they try to make it way back up again, but again, in the final hour of the trading day, it got messy for the buyers. So how does this pattern continue? Or does it go inside bar down and further down? Okay, so we're watching that now come Monday. So one thing just to quickly mention here on the indices. So here's SPY once again, right? So here's the situation you want to look for a bigger reversal. Well, this is what you can potentially see play out, right? So this is a momentum down condition. We talked about it already, right? Momo down, outside bar down. Okay, essentially, if and when this momentum extinguishes, that's when you're going to set up a bigger reversal to the upside. Okay, so going into the month of April, if you want to see, if you're a bull and you want to try to argue the bull case, you need to see the prior month's high get taken out for the monthly reversal to happen. Okay, that means March's high, that level there, has to be taken out before you can go back to the upside. All right, because there's going to be bears here, sellers here, who are going to have their stops there, and they're going to remain convinced of their shorts until you begin to see these highs get taken out. All right, so that's what you need to see for the selling to really alleviate itself, and for the bull market to kick back into full gear. This is what kind of had happened back in 2009. Okay, so that bottoming process at 666 on the S&P futures. This is what it looks like on the SPY on the monthly chart. So you had the inside-outside bar down. Then you had that extinguishing of the momentum right there. So when that low, that high got taken out back in 2009. So again, you're going right in the lows here, right? So it's going outside bar down. Imagine what's happening in 2009 where it looks like everything's going to collapse. It goes outside bar down, and then here it actually opens gaps down below the prior month's low, right? They sell it some more. Then the buyers step back up. It comes back in the range and it closes. The next month, this month here, April, Guess what? New quarter. That's why the blue line's there now. Because up until then, you're trading below, right, the blue lines. Okay? New quarter. Opens there. Breaks above that. Now you have full time frame alignment. And then it's gone. It never looked back, right? Went from here all the way to, again, from the start of April all the way here, right? And that's a pretty good rally from, let's just draw the peaks here. So absolute trough. So the trough here to the trough there, to the peak there, excuse me, an 82% rally. Okay, and it never came back, right? So people were at that time kept hoping for that double for that retest of the bottoms, right? But it never came back. Now this was a bit of a funky move here because it broke below prior month's lows. That outside bar, once the buyer stepped back up again, it trapped anyone who went short, and it kept going. All right, so that's that. That's the bottoming process is not always pretty, and you kind of have to. It sometimes takes a few attempts, because you can argue, well, this is kind of the same attempt here as well, right? It tried to break above this quarter, Q1, and for a while it did trade with full time from line to the upside, but once it breaks below there again, it's that kind of rally is wiped out. It creates new lows, then they buy it back again, outside bar down, breaks above there, extinguishes the momentum, and then they kick off a rally with a plus 80% move to the upside. So, not saying it happens again this time around, but you got that outside bar down condition now, right? The only question you need to be asking is, how far does outside bar condition go? So long as it keeps going outside bar down, and you're not taking out the prior month's high, you have to have a kind of a bearish bias on that monthly chart, even if the month is green. So even if you have a green month here of April, so if you're not breaking out above the prior month's highs, you're not breaking that momentum downside condition yet. All right, so that's it for that aside there. Let's go back to our analysis and let's talk about the TSX now. We'll go a little faster. So TSX again looks a lot like the rest of the indices. Outside bar down on the month. It did touch the other side of that brown information. So look at that brown information. Did we capture that? Yes. It caught it right to pretty much to the tick there, right? It took out all those prior pivots as you would expect, and you got that outside bar. Okay, so how does that outside bar? What's the next bar in that outside bar condition? Because it's still outside bar down right now, and the TSX and the Canadian economy looking very vulnerable given just the headwinds with the weak oil number, with the weak oil and the oil war, as well as the supply and demand destruction. So Canada right now looking very susceptible to more selling. So we got that outside bar down. How does that get extinguished or not? Weekly, just like the rest of the indices in the US, outside bar up condition, and now we want to watch and see now how do we trade in relation to that outside bar. Okay, so that's the TSX. Now on the daily chart, we did have something different than on the US charts. It actually went inside bar and down. Okay, on Friday. So unlike the US, where most of them ended inside day, on Friday, Canada had an inside bar on Thursday. Okay, and then it went Friday inside bar down. So now the new week coming up, if they keep selling it, we can get back into that level there, and that will definitely portend to more selling. So on that 2-day chart now, you do want to see how this thing breaks. Okay, so inside bar, you break below there, you come back through that range, especially if the weekly open is up here, wherever we open up. Okay, so watch out Canadian indices. Emerging markets. Okay, still momentum to the downside. This thing broke below its broad information and it's still going. Okay, so let's maximize that. There's a bigger broad information sequence now, and potentially that's what it's trying to do here. It's trying to go after those Q1 lows of 2016, but it broke below this broad information now, and you want to wait. Can it stay below there? And then if it does, we have this next line of pivots to go after, or do we get back up into the range and make its way back up again? But right now, momentum to the downside. How do you break that move? 3 consecutive red months in a row so far. On the weekly chart, just like the rest of the stuff, did I say everything traded in correlations? It very much does. So outside bar, and now you want to see that range there. How do you break outside that outside bar, or you don't? So that's it for EM. And on the 2-day chart, here you go. Something to look for is this here. It had a momentum move to the upside. So Momo up right now on the 2-day chart. This is why you cannot overweight one single bar. So remember, this 2-day bar last week, not this past week, but the prior week, this outside bar looked very bearish, correct? So if I just show you that chart there, and you see that last bar, outside bar red, some people are going to think it's, that the world's ending, right? Especially because it closed near the lows the prior week. And that looks very, very negative, because all of a sudden you're like, well, that's an engulfing, that's an engulfing bar, bigger than that bar. It's going to be more selling. Not necessarily, because if it does this, these guys are trapped, right? It goes outside bar up, that's momentum, and then it goes like that. So it had another 2 days, I had another day of rallying before it came back in on Friday. So right now, outside bar up, but if you break below that low, that's bearish, because you can come back to the range again. The momentum got extinguished, and we know that pivot's there. They can quickly rip right back to the range again and take out the prior week's lows. So watch out for that move there on the 2-day chart. Now let's talk about bonds, because bonds, the risk off of bonds is very, very attractive, because this trend is still very much intact. So the 3-month chart, inside, quarter, and up. You still got, again, a couple days left of the quarter, and this signal is still working. Inside bar and up a whopping 23% for bonds right now this quarter. Okay, on the month, outside bar. So definitely give a big head fake, broke below Feb's lows, and they bought it right back again, rip right back to the upside again, and you're still up 20+% for the quarter, for the Q1 quarter. Now here on the weekly chart is what we're watching for. Is how do you break the prior week's range? Because last week's range was huge, right? Look at the size of this bar here. Big bar. This is definitely liquidity related. People were selling off basically anything they could to raise cash to meet margin calls or to meet liabilities, right? So all the liabilities, most of the liabilities are probably denominated, if you're an American citizen, are denominated in US dollars. So that means when you have to make margin calls, that means you got to raise US dollars. So you got to sell anything that is, that's going to give you cash, so you can basically pay off your liabilities. So that was including TLTs, including treasuries. So people did that. They raised some money, and that was reflected here. They sold off treasuries hard, but they bought it back again. So outside bar down, that was momentum to the downside. Momo down this week, extinguished it. Now expected to go back to the upside here. For the month, the highs of March. That's the move now. But how do you do that? Is it going to go straight shot like that, or does it grind its way higher, or does it get choppy? So here on the 2-day chart, right there, it played itself out very, very nicely this past week, because here it was inside bar down. This week went inside bar down, reversal, right? That's called an inside bar reversal, because it reverses the move that came to the downside, came back up and took out that pivot. Inside bar. It's consolidation, and then expansion. So there you go. It's doing its inside bar up thing right now. And now if you're a bear, if you can break below this low here, that'll be an inside bar reversal to the downside. Okay, but the only thing is that you do have the time frames to worry about, the monthly open and the quarterly open right there. So if this happens though with the fresh quarter, maybe we see bonds come in a bit if you get that signal. If not, if this inside bar up condition keeps going, you can keep going and take out that prior high there. So watch for that. We want to basically redraw our ranges now. Where do you trade in relation to this past week's highs and lows? So let's talk about gold, because that's also another risk off asset that has been performing very, very well. This past week was a really, really nice trade on gold. I'll show you what I did with the MGC contract, the micro E-mini micro gold contract. Okay, so for the gold move, let's talk about this one first. Quarter chart, it's still Momo up. Okay, so look at this. Starting in Q2 of 2019, it went Momo up. Okay, so Momo up still in play, even though it looked like it was going to break down right earlier in the month, but it's still in play now. Inside bar up, still Momo up for the gold. On the monthly chart, big outside bar, big outside bar. Outside bar. Now we want to see in April, in Q1, how do we trade in relation to that range? Weekly chart, this is the big reversal, right? So just like TLT, we had that outside bar down and now up. Same thing in gold. Outside bar down, it breaks above the prior week's high. Now going after that pivot there. Came very close this week. It was going to be, it came very close. That high there was 17.042. You got as high as 69.2. What an amazing move, because that was a huge pullback. Imagine the SPY, recouping all of its losses in 1 week. That nearly happened in gold, right? Because peak to trough, that high there, 15% move. So not quite as much as the SPY, which is down, over 30%, but that's a 15%, pullback, and it nearly made it back in 1 week, right? It came close. So here was the opportunity on MGC. So on MGC right there, going into the week, look at the sequence. Inside bar, and then it went inside bar down, inside bar reversal to start the week. Okay, so there's your inside bar reversal to start the week. As soon as it breaks above there, right, it's gone. As soon as it broke above there, it was gone. So inside bar reversal to the upside, right? You break above there, right? Because anyone who shorts this, right? So here's the idea. If you short this bar, that's an inside bar break to the downside. That's a momentum move. Where are you gonna put your stop? Maybe there, or there, right? If you want to have a wider stop. Well, if that trade fails, this is what it looks like. Okay, so when that trade fails, it works for you in a little bit. You think you're making a bit of money, and then all of a sudden the buyers step up and they come and get you, right? And that's what it looks like when you have an inside bar reversal. People selling breakdowns, right? They're going into lows. That means they're chasing price here, and they get stopped out on the way back up again. So MGC, there's your inside bar reversal. That's a little bit trickier of a sequence, a little messier. To make it really clean, looks like this. Okay, inside bar down. This is the 2-day chart. It's a lot cleaner. Inside bar down. As soon as you break above that pivot, right? You're going after that pivot there. You stop all those guys who try to sell this breakdown right there. Brand new week, right? So it's very perfect. It was very, very nice in terms of alignment, because it opens here, and if it works, it's going to be a green week. If it breaks above there, it's going to be a green quarter. Yes, you're still green, a red month, but at least you're going to go after that pivot. So here's the actual trade that I took going on Sunday night when the gold futures market opened up. It was a very nice trade. I'll almost put it on this chart here, 12-hour. So you know the pivots already. So that blue line is the prior 2-day bars high, because you want to try to make it an inside bar reversal to the upside, but you're going to try to finagle it using a lower time frame so you can get a better risk to reward or asymmetrical trade. So on the 12-hour chart, here it is going into, so this is your Sunday right here. Okay, so there, outside, inside, outside, inside. Love that pattern, right? Inside, outside, inside, inside. There's your break right there. You break above here, right? That's Sunday evening, and here's your risk to reward. You put your stop right there below that inside bar, and that thing moved plus 7R, right? So that was a fantastic trade going back through the range again. We love that trade because it's going back through the range. Anyone who got short in this sequence, only the guys who left their stops way up here, right? They didn't get stopped out. So everyone else, even those folks who put their stop there, they got stopped out. Obviously, all these folks here got stopped out who were short gold. So obviously, gold had a lot of fundamental news around it, around being able to take possession of it. There was actually a bit of a discrepancy between spot and futures this past week. So a lot of historical stuff happening, liquidity related stuff happening around that shiny metal. Now let's talk about another commodity that's been in play, and that's oil. So let's bring up the Brent crude contract. And is this the right chart I have here? Let's see. UK oil. Actually, this is not the one I like. I want to bring up the UK oil contract here. Okay, man. So crude now has fallen below $25. So I drew this broad information a long time ago, but it doesn't really matter if, when I did it. But you can see how it's playing out now. The reality is that it's going out the other end, right? So it's going from one end to the other. So I'll draw on the monthly. So here you go. This high is higher than that high. You can even draw it like this. Doesn't really matter what your high is. But that low, right, is lower than that low. And so we're getting very close now. This pivot is below that pivot. And so you have a little bit more now to take out the bottom of that broad information. So once we get that level down here, you need to watch out and see, does it keep going? Does it break below that trend line? Or does it pop back up again, come back through the range? So we're looking for oil getting destroyed, outside bar down, down. What's that? Momo down. Correct? So Momo down. So it had a mobile down condition back in 2018 as well. Not to this magnitude, because this is a 50% bar. But look, this was a pretty steep sell-off too in 2018. This is what you can expect to happen though if you have an extinguishing Momo. Outside bar, down, down, inside bar, right? So this is when the selling basically stops because they have a stalemate. So the buyers and sellers meet in the middle and they have some consolidation. They cannot push it any lower and the buyers cannot push it any higher. They have a full month of consolidation. It goes inside bar up. They have a multi-month rally on oil and then, chops around for several months. Then all of a sudden it kicks back up again, outside bar down, pow to the downside. So now you want to look and wait and just see, okay, what's the next bar, right? Do we get an inside bar like we did, way back here in 2019, on January 2019? Or does it keep going outside bar down, down, down? Okay. That's your oil picture. Again, oil right now, no sense of bottoming yet. You still got a bit of range left here to take out that lower level of that broadening formation. And just keep your eye on that, on this outside bar down condition. How does it get extinguished? Because right now, on the monthly chart, it's big red bars. Weekly chart, the bars are getting smaller, but you need to see a reversal, right? So this coming week, if you can somehow break above this bar's high, that is going to alleviate some of the momentum of the downside. But you need to see this bar to get, extinguished, or maybe a next month's bar high get extinguished or taken out before you see that momentum extinguished on the monthly chart. But here on the 2-day chart, it looks a little bit like the gold chart that I showed earlier, where you're basically selling in the lows, right? So if you're selling here now, this is an inside on the 2-day chart. 6 days of consolidation, right? And finally on the last couple of days of this week, it broke below that range. So now you're going right in the lows, right? Because there are no nearby lows here, right? You have to go back months, years, right? So this is like 2016. You have to go back years to get a lower low. So now you broke below that lower low, right? So now you're going right in the lows. So it has to keep going. If you don't keep going here, because this is chasing, right? Because if you got up here, you're not chasing. Here, you're going into lows. There's no more lows to go after. Yes, there's absolute lows, like way back in time, but those guys are not in play anymore. The folks that you're trading against now, those guys are the ones who you're trading now. They're not looking at the price, or they don't have positions from this far back. They're not holding stops to say, okay, I have a stop here from 2001. No, those aren't the guys you're trading against, right? So now this part, it has to go. If it breaks above this pivot high here, you're going to create an inside bar reversal that can trigger reversal to the weekly ups on the weekly chart. Okay, so that's what I'm going to watch for now. Is that oil here now, because it's getting so beaten up, you might see a bit of a relief rally if buyers can step up here. This would be the type of pattern you'd want to watch and see if they can get a reversal. So oil, potentially interesting for this coming week, this coming month and quarter. One final chart for our review, that is the Bitcoin, digital gold coin. And Bitcoin's still doing a lot of nothing. So 3-month chart, outside quarter, right? So outside quarter, what's the next bar? Monthly chart, it's getting messy. So now it's getting messy, and right now your bias is still to the downside, right? Because you're still trading below the monthly open. It's still a red quarter, and it's basically consolidating. So this past week, it did break above the prior high. I did start a small position here when he broke above that high. So now, I'm underwater in that trade. I will get out of that trade if we break below that low. We break below 56.77 and come back down here again. So I do not want to stick around. If we break below this purple line, I'm not going to be a buyer anymore of Bitcoin. I'm not going to be a holder of it either in terms of my trading account. I'll be looking to get out. But if it stays above here, it can break back above. You can have this can definitely come back up here and take out that pivot high right there. So that's what we're looking for now. The issue with Bitcoin is that it's very choppy, right? Because you're sitting inside a range. So this is the daily chart. Look how tight that is. Because all this stuff is happening basically inside of this bar here. So this big bar on the 12th of March was close to minus 40% bar, right? So now we're just chopping back and forth, doing some price discovery inside this big bar, mother bar. 2-day chart looks the same. Okay, so even though it cleans up a bit, it's still a very messy chart, right? So very messy stuff here. Chop. People getting killed going short, long, short, long, short, long, you're getting killed because if you don't understand this, you don't understand you're trading inside this. Until you can get a clean break of that, it's going to look like this, right? So even though this is potentially a sell signal to the downside, because it was outside bar up, breaks the momentum here, you still got the weekly green there. But if you break below that level here, there's your 56.77, that's going to be an inside bar reversal to the downside on the weekly chart, and you want to get short there. And that's what I'm going to be looking to do. So that's it for Bitcoin. So let's see what happens now with the new week coming up for BTC. You really want to see, if you're a buyer, they have to defend that level, 56.77. If it doesn't, you're going to create some more sellers once it breaks below there, and it's going to come back down, and you can probably retest those recent lows. Would not be surprised to see it go down even further. Ultimately, I think it's a very tall order, but Bitcoin is just doing this. What's that? Inside action. Inside year, inside year, inside year. So this is the 1, 2, 3rd consecutive inside year so far. A lot of year left, could break out of there, but until you can get out of those ranges, it's inside year trading. Okay, so that's the reality, is that every month, this is what's causing the chop, because it goes up and it reverses to the downside. It can keep going down, but as soon as you get a reversal back to the upside again, that's going to be another reversal, and you can expect that kind of chop back and forth when you're trading in a range condition. Okay, so that's what we're trading right now, is those ranges. Okay, let's do a few interesting charts, and then we'll wrap things up. So maybe I'll just quickly review the sectors here now. I'll do a very quick review of them to show you which sectors are kind of more prominent and less prominent. So we'll do a big analysis here of our quarterly charts. It's been a while, so let's do that. This is basically the last trading week of the quarter. So let's take a quick look. So basic materials really getting hammered. Let's go back to that monthly chart. Looks better. So the monthly chart here now, you come back to the range, come back to the broad information, and they did buy back a bit, but still one of the worst performing sectors. Energy still looking terrible. You can see it broke below that broad information, and it's trading well below that pattern. Financials, it popped back up a bit, but you still have some range to go. So right now, they're all the same, right? So they're all outside bar and down conditions now. What you're waiting for to see a bigger reversal is, do we see an outside bar, and if you see this outside bar momentum position, pattern get extinguished or not? Pop back up, can it trade higher or not? Industrials still getting still popped up a bit, but it's still very weak. We'll just draw in our levels here. Okay, pop back up. Tech holding up fairly well out of all of them. Did not get close to the Q4 lows yet. So tech, even though it's going outside bar down, has come back up again. It did break below there. It did break back up above there. So now, let's see if it stays above there or not. Okay, let's take a look at staples. So I was drawing in a few levels here. Staples hanging in very strong, so they bought it back, right? So here's your broad information. Pop back up. Okay, so people are jumping into staples. They're also jumping into utilities. Right, look at that. They bought back utilities. So bam, hit the other side of that broad information. Remember, utilities was trading very strong before things started to break down, right? So it was trading very strong here, going to Q1, going to January. Then all of a sudden in February, outside bar down. Look at that move on utilities. Boom, right back to the range again. Stopped out all this grindy mess. Who got long on that sequence there? They all got stopped out if they're using stops. Healthcare doing pretty strong as well. Okay, so the healthcare, obviously, this is we're living in a world now where healthcare system is under enormous strain, but certainly there's lots of opportunity as well. So some companies there are holding up and holding in their well, so they bought back healthcare. And one final one, discretionary. Not quite as strong as staples. Look, you can see staples here. They did buy it back a little bit more aggressively. Staples, they bought back there a bit. You can see the bigger shadow. But discretionary right now, off the lows. There's that broad information. If you can see it, I don't think I need to draw it in, but you can see it for yourself here. You can eyeball it there. Okay, outside bar down. So they're all the same. All the sectors, they're all outside bar down. You simply want to see when that momentum gets extinguished to the downside. Okay, so let's finish up here now with a few interesting charts. We'll go with the weekly chart here now and let's take a look at a few names, and then we'll wrap things up. So Speaking of staples, so look at these names here. Dollar General. Okay, so here, I'm gonna delete this line here. Outside bar down, inside bar. So this past week, we found some buyers. Now, if they can step up here on the coming week, coming month, coming quarter, you have that outside bar down, and then pop back up here now to extinguish that momentum, possibly signaling a move higher for names like Dollar General. Okay, outside on the quarter, on the month, excuse me. Dollar Tree, same thing. So these names here are actually catching a bit of a bid here. Good couple weeks here for Dollar Tree. Same thing, outside bar down. This past week it actually did break above the prior week's high, so it did extinguish that momentum. Can it keep going though? Right, it hit that monthly open right there. We're gonna have a new month right around the corner here now. So how does this thing trade in relation to those levels? But right now it's still a big red month, but this is how you can begin to repair that. People may be doing more shopping now at the at these names. Dollar Tree, Dollar General may not be a bad area to start looking. Another interesting name, Diamond Offshore. So this one here, oil. We talked about oil already. This is setting up for something. Outside, inside, inside. So 2 consecutive weeks of inside price action preceded by an outside bar. So this thing is going to pop. So something's going to happen to DO here, and you definitely want to be keeping that on your watch list. DO, Zuo tech name. We got a double consecutive inside week. Don't know how that's going to break. Just simply watch that, because anytime you have that amount of consolidation, you definitely expect to have this thing break and have a bit of range reclaimed. Another name, Oracle, seems interesting. May not have that much exposure to this downside environment. So far, inside week and up on Oracle. So this past week went inside week and up. Okay, so it popped up, hit that monthly open though, and it came back in a bit. But here's what makes it interesting. Look at that monthly chart. All right, so I'm going to redraw this thing here. So this draws in like that. So there's your broad information there to the upside, and to the downside it kind of looks like this. All right, so it hit to went to the downside. Look, they bought it back, right? They really bought it back. So once you get a new month and new quarter in play, if they can break above this high here, right there, I'll make that in orange. That indicates my monthly levels. If they can turn this guy, so where's my orange line there? If they can break above March's highs. Okay, that's inside bar down. You extinguish that momentum to the downside, and then you go after Feb's highs, and that will definitely repair Oracle's charts, and it will not look like such a mess anymore if you can break above there. Because look, on the quarterly chart, that could be an inside bar reversal, right? So in Q2, if you break above there somehow, or later quarter, if you can break above that Q1's low highs, excuse me, that's an inside bar reversal. They're going back up here again. So Oracle right now looking very, very strong. Keep paying attention to it. Whatever they're doing, the buyers are stepping up right now and showing it. All right, so let's talk lastly now about some fast fire charts. There's a few names I do want to show. Every week I show some names that are flagging that they're trending, either strong to the upside or the downside. This is just kind of an approach to see where the money's going. So on the positive side, let's see where the money's been going this past week. We obviously know it was a huge relief rally this past week. Where did some of that money go? Well, to some of the names that were the most beat up. So frankly, guys like Wayfair, I want to delete these lines here. That's really, there you go. Wayfair, what a massive run this past week, right? It went, see how, some of these things, like they more than doubled. Look, from the recent lows, Wayfair went 181%. Right? So from the bottom there to this high of Thursday, it went over 181%. Okay, so that's the kind of rally it was in Wayfair. Took a bunch of profits. Folks took a bunch of profits on Friday. So quite the move there. It was down to 21.70. Yeah, it got up to close to 60. What a move, 61 actually on Wayfair. Boeing, of course, the Boeing is, they extended, they needed their credit line and they got it. So yeah, they had a huge rally in Boeing. That took it from the lows here from March the 18th all the way to there. 109% return in the span of less than 2 weeks. All right, so that was a huge move. People piled into Boeing there. Crocs, remember we were talking about Crocs a couple weeks ago, how bad it was getting beat up. People didn't want to wear rubber shoes. Well, this week they got a big snap back, another big relief rally. How can that hold though? Goose, another retail name that got really crushed in this downturn. Look at that monthly chart on Goose. Wow, it's still momentum down on Goose, but this past week, bit of momentum, I guess a bit of a relief rally from these lows from the 17th to there, up 68%. And one final name, this is indicative of a lot of names in this sector, Tilray. So Tilray had a huge move. Look at this move from Tilray. From the lows there, low was 243 to Friday, 817, 300+% in the span of basically 2 weeks. So what a move on Tilray. And some of these marijuana names, they reversed, right? So we talked about it. They had been going down very aggressively for some time. So I'll delete some of these lines here now. It was Momo down on Tilray on the monthly chart, and it was getting beat up, and finally you got that reversal right here, right? So you got that weekly reversal. It was doing the Bollinger Band walk. That's just why I always bring it up every single week, and it's worth paying attention to, was that it was doing the Bollinger Band walk there. Let's draw on that level really quickly. Okay, so there, broke below there, staying below the Bollinger Band. Finally this week, broke above it, and that creates that momentum, that relief rally. So a lot of marijuana names also rallied, so I'll just pull up the MJ ETF, and there it is. Inside bar, down, Bollinger Band walk to the downside. Once you break above there, right, pop. Big relief rally for marijuana names. All right, on the sell side, there's most things were going up this week. You have to be hard pressed to find stuff that did not rally. So you do want to pay attention to that. Which names didn't rally? Well, some of them in the oil sector did not rally whatsoever. So names like CRC, California Resources, man, can you say supply destruction? Man, look at that, right? Supply and demand destruction. This thing was going full off to the downside. Again, looks like they're mulling bankruptcy here. And they're trading down to, what went down to 93 cents. This is the thing that came from, how far back? This was once a big company, right? This thing I traded at 96, 98 bucks at some point. So yeah, this thing has been getting destroyed. So yeah, money's still leaving the some of these energy names. CRC names like NE, Noble Energy. Wow, a little tight here, but still going on lows, 27 cents now. Oil, obviously we looked at oil already. This thing is not going down yet. We made some fresh lows. Did it break below there? You also did not break below there. So 429. This guy got as low as 433, so not quite that low yet. TBT, right? We already talked about how people were jumping back into bonds, and that means inverse ETFs. Like this is a ultra bond short, getting some selling because people going back into bonds. And one final name, which is a bit of one interesting one, is Walmart. They actually sold off Walmart this week quite aggressively because Walmart had that really good run prior to that. Walmart had a huge run based on some better expected earnings and an outlook, but it came back in again. So here they just sold it most of the week, so money leaving Walmart. But in the bigger picture, it looks like that. Choppy, but it now gives us a really good understanding what's going to happen next. Inside, outside, outside, inside. Here, a bunch of people got crushed, right? Like people got short and they got stopped out. They got long and they got stopped out. Now you got a stalemate. Inside bar. Inside, outside, outside, inside. What's the next bar? I'm gonna bet you it's gonna be an expansionary bar if it can clear these ranges. It's gonna be a good move. So watch Walmart now because it's setting up based upon this. If anyone, once it breaks inside these ranges, people have to get back involved in the trade again because they got whipped sawed both ways. So now we want to wait and see when it cracks those ranges, or you're looking for a way to crack the ranges with a shorter time frame trade. This will be interesting to watch in the near future. All right. So that brings us to the end of this week's video. A little bit long again. We covered a lot of material, so I just want to thank you for taking time out of your weekend, out of your week, to watch and catch up on all the price action stuff. As always, if you enjoy the videos, give us a big like, so that way we get more subscribers on YouTube. You can also subscribe to the videos on YouTube or by going to our blog, thetradingedge.org, where I have a weekly newsletter. You subscribe to that, you'll get an email when this video comes out, as well as my weekly trading perspectives, where I talk about things that are of interest to me and some other ideas. And as always, if you do like the videos, share them with your friends, with your colleagues, or anyone else you think could use this analysis. So I want to wish you a good trading week, and more importantly, I want to wish you wish that you stay well, stay safe, stay strong. Very challenging times for a lot of people out there, and sometimes as traders, it's easy to get caught up in the minutia when there's so many bigger things going on in the world. Sometimes it's good to take a step back, realize that we're in a very fortunate position to be traders, in that we're not exposed to some of these things as a lot of other people are. For a lot of traders, we have who have the luxury of working from home. Then you're kind of not affected as much by the current pandemic. A lot of other folks out there, this is a very challenging and trying time. So extend your spirit to them, your strength to them, and we'll all get through this time together. Thank you so much, and happy trading. All the best.